On All About Stocks this week, volatile trade on Dalal Street, but an upgrade from the S&P has pushed markets higher on Friday. We'll tell you what your investment strategy should be. Metal stocks take a hit as the Supreme Court cancels coal block allocations. What should you be doing with your holdings? And our investment advisor, Chokka, has made a profit of 76% in his portfolio. We'll tell you how you can make similar returns. Welcome to All About Stocks. You're watching ET Now. I'm Faye D'Souza. This market seems like a volatile and confusing place. Should you be buying right now? If yes, what should you be buying? Over the next half hour, we'll give you the answers to all of those questions while we break down complex market jargon as we go along. We'll answer some of the questions you sent in during the week. Remember, if you have a question about the stocks you're holding, write to us. Our email ID is at the bottom of your screen. You can also reach me personally on Twitter. Let me first bring in my colleague Ajay, who will give us an update on how Dalal Street did this week when you were in the office. Ajay, go ahead.
Well, Faye, it was another challenging week for Indian equities. We saw about 2% cut coming in on the benchmark Sensex and Nifty this particular week, whereas the broader markets saw even more damage coming in. Around 4 to 5% was eroded from the BSE mid cap and the small cap indices this particular month. It was very volatile. In fact, at one point in time, the Nifty fell below the 50-day moving average and went all the way to 78, 50 or the vicinity of that, looking like we would probably test lower levels, only to face a big short covering bout in the market on Friday, which came in because of the commentary from S&P, which took the market or the Nifty above the 79.50 mark once again. But the one factor which was pretty pronounced this particular week was FII selling. In fact, past 2 weeks, FII buying has completely vanished, and in fact they are seen booking profit in more days than they are seen buying. Around 2,500 crore worth of equities was sold by FIIs this particular week alone. But of course, the big news came in on a Friday evening and they took the market higher, and the Nifty futures went above the 8,000 mark. And the commentary from S&P indicates that they have actually come out and upgraded the outlook for Indian economy from negative to stable. But the kind of commentary which it has gone into that, saying that the new leadership, the political leadership in the country probably would herald an era of reforms, and the chances are that the macroeconomic worse for the economy is behind us. Most of the traders believe that this actually puts a big floor in the market. Commentary from S&P. Though other rating agencies already have a stable outlook for Indian economy, S&P is a big one. Of course, the big trigger for the market will be the commentary coming out from RBI on 30th of September when it's scheduled for its policy, and that is the big trigger for market. But net, it was a damaging week, but at least the outlook in the near term looks better than the kind of week we have actually seen this time.
All right, Ajay, thank you for that update. Joining us today, Chokka, founder of Economics Research and Advisory Private Limited. Chokka, thank you so much for coming in. It's a very interesting weekend we're having right now because a massively truncated week coming up. We know that our Prime Minister is in the US for the first time. So there's a lot of change in sentiment in terms of what India is capable of. Let's take it piece by piece. I want to first start by asking you, the visit to the US in terms of investor sentiment, both overseas and in India, what sort of a difference do you think that will make?
See, normally the visit by the politicians don't make much difference in my view. But of course, it can pave way for, in strengthening the relationship. Because we have to understand the background that there has been, political economic development involving India, China, Japan. So in the midst, you have US. And this government has done a lot of naval exercise near Indian Ocean, Chinese land in the Indian Ocean. So there has been a lot of political development. In this scenario, I believe that India going close to Japan and US can help the economy in terms of bringing more.
It's also interestingly timed because on Friday afternoon, India received an upgrade from S&P, which of course would matter more to foreign investors looking at India and also in terms of sentiment at home. So do you think all of these things are now coming together, to improve sentiment on the floor?
It always happens like this, and rating agencies are always at the end of the show. We saw even Lehman case after bankruptcy. So we already seen, starting from IMF to World Bank, yesterday to ADB, everybody has increased the, improved the outlook for Indian economic growth. So I'm not surprised, but it's a fact that, as I've been saying, first time in the last 20 years, we've got a fantastic political stability, which was not there and create a lot of problems. So that itself will be a major conducive factor. Second, Indian economy never stayed at a very low growth for more than 2-3 years in a row. So I'm pretty confident that we will pull up from 4.7. So therefore, this would also add some sentimental boost to the market next week.
Also, the Make in India campaign that we saw the government launch, since we're talking about, the stable government, how much of a difference will that make to the manufacturing sector?
I mean, this statement will not make. We have seen in the last 5 years many times, state level conclave and committing lakhs of crore. Nothing much has happened. So unless there is a credible measure from the government, you won't see any impact. Like for instance, the government is now talking of shutting down loss-making PSUs. Top 10 loss-making PSUs are making 24,000 crore loss per annum. So if government takes such a credible measure, and then I think it will have impact. Otherwise, per se, holding these conclaves will not make any difference.
All right. Also, since we're talking about next week, tell me what your expectations are from the RBI's policy meet.
From the tone of the governor, I don't think there will be any major change because we saw yesterday the media, release from the RBI. The inflation remains as a major concern. But I can tell you that, the inflation is not a concern at all for the economy. Right. Across the world, commodity prices are falling. So Japan is worried that they are not able to get 2% inflation rate consistently. And you take any commodity, whether it is a metal space or rubber, cotton, sugar, everything is hitting low. So perhaps, this is a time to worry about recession, not about the inflation. I think very soon the RBI will get this realization. They would start cutting down the interest in the interest of promoting the growth in the economy.
So very soon would be what, 6 months?
Within 2-3 months, because the rate at which the prices are falling, it's really scary. I mean, you look at coal price or iron ore, everything is falling 30-40%. Even look at agri commodities, which is surprising. Despite a population growing across the world, palm oil is now, several years low. So wheat price is, more than 2-year low. So it's really scary. So the prices will come down and that will help us. And if you remember post-Lehman crisis, we had a negative inflation for a couple of months. And just imagine all these prices are coming down despite all the stimulus packages. So once the stimulus packages are completely withdrawn, then what would happen to the prices further? Yes. So therefore, I am not at all worried. Within 3-4 months, they will be forced to cut down the interest rate.
The other very big thing that happened this week was the Supreme Court cancelling those coal blocks, and it seemed like such terribly bad news for an industry that was already not doing so well. We just talked about commodity prices. Take us through, for our viewers who haven't really understood how all of this will play out, could you explain to us what this means for the stocks that will be impacted? And if I have any of those stocks in my portfolio, what do I do?
The impact is that it has come at a time when things are pretty bad for the power and metal stocks sectors. All over the world, as I said, the metal prices are coming down, iron ore, coking coal. Even you look at China, the steel production has gone up by 6-fold in the last 13 years. So there has been a lot of stress. Now this judgment has come at a wrong time. I mean, I'm not questioning the judgment. It has come at a time when the industry is really in serious stress. So for the investors, it's very hard to say, book the losses. But if there is any small recovery also, they can definitely come out of this entire space and look for very defensives in IT and pharma. Perhaps those sectors will...
If I'm not mistaken, you're saying avoid the steel and the power sector entirely?
Majority of them. There are 1 or 2 stocks. Like for instance, if you look at Hindustan Zinc, the zinc metal as such is not impacted so badly. So, you can have 1 or 2 specific names, but otherwise it is better to avoid for some more time.
Tell me also about Coal India. Now, we know Coal India would actually benefit from this ruling. For those of us who have Coal India in our portfolio, what does this mean for us?
They should hold it. Okay. There is, slowly we are getting into dollar squeeze. The dollar demand is increasing. And it is projected that we will end up importing a lot of coal in the future. And on the other hand, Coal India is sitting on more than 100 mines which are pending for environmental clearance. So therefore, what would happen is that the government would be forced to clear several mines which are pending for the clearance for Coal India. Plus, there is a possibility of temporarily Coal India acquiring these coal mines which are cancelled. So therefore, one should hold on. If there is any correction, one should even accumulate the stock.
Pranav has written in, he has 10 shares of Petronet LNG that he bought at 160 rupees. He also has Suzlon, which he bought at 10 rupees. Now, we just talked about the power sector, but let's also talk about this industry. Petronet LNG ended the week at 185. It slumped about 5% in trade after the Asian Development Bank dumped a fair amount of stock. What do you think we should do with Petronet LNG?
It is not cheap stock, and also it has got problem because GAIL has not been able to implement the pipeline in Kerala. So I would suggest him to sell and buy defensive like Biocon. And the subsidiary itself is valued at almost 38% of the market cap of Biocon. And Biocon is a zero-debt company, a lot of cash on the book. And it will always safe bet in case, rupee takes further impact in the sense if it depreciates further. So therefore, I would suggest Biocon to replace.
What about Suzlon Energy?
Suzlon also I would suggest sell, great management, but I don't see any turnaround in near future. So he can convert that into KCP Sugar, which gives close to 5% dividend yield. And I firmly believe that sugar sector should turn around very soon.
All right, let's take another question. Mukesh has written in 100 shares of ICICI Bank, which he bought at 1590. What should he do? He asks. ICICI Bank ended the week at 1477. He seems to have gotten in at a rather high level. But you're very bullish on ICICI Bank, aren't you?
I'm not that bullish on ICICI Bank, frankly speaking. I would rather bet on Karur Vysya Bank. It's my passionate stock. For simple reason that, in next 1 or 2 years, this can outperform most other banks. Because in FY14, the profit came down by about 25% year on year. That is mainly because they aggressively increased the number of branches in the country. So now the new branches will start, turning around, and also the NPA cycle will reverse for them. And plus, in 2 years, they are going to celebrate 100th year. So I'm expecting a lot of rewards to the investors. So therefore, I would suggest sell ICICI and buy Karur Vysya to make more wealth. All
right. It's time now to also look at Chokalingam's own portfolio. Now, remember, we mentioned at the beginning of the show, it's currently at an overall gain of 76.4%. This portfolio was started on the 8th of August last year. The Nifty over the same period is up 42%. I'm going to give you a list of the stocks in this portfolio. There's ITC, Infosys, RIL, International Paper Corp, Neyveli Lignite, Bombay Burma Trading Corporation, Emphasis, Karur Vysya Bank, Barmer Lorry, Moil, MRF, JK Tyre and Sensa Technologies. I'm told you want to make some changes in this portfolio right now.
Yeah, Gensar has run up a lot. So I would sell Gensar and buy Claris Life Sciences. I firmly believe that Claris can create a good amount of wealth in the next 1 year. And similarly, MRF also has given 30% return. We added just about a few months back. So I would sell MRF and then accumulate a Biocon. And third is JK Tyre. In fact, it has gone up as high as 530 few days back. So I would suggest that there is a possibility of again going back to around 500. At that rate, they can sell and buy KCP Sugar.
So there are two ways to read this now. You're removing both of the tyre stocks in your portfolio. Do you believe that the tyre stocks are headed for some sort of correction?
In fact, JK Tyre we added from the beginning itself, about a year back, which has given now more than 300% return. And MRF I have added tactically 2-3 months back. Now what has happened, the rubber prices have crashed. Now it's about 120 rupees per kg. Here beginning price was 165. Now there is already a lot of unrest among the plantation people in Kerala. So there is a possibility of political intervention and hiking the import duty on rubber. So this is the reason that tactically I believe there could be one shock. In case there is a shock and these stocks correct 20-30%, I might even re-enter, but otherwise it's a time to start booking profits.
All right, I have a larger question for you here before we move on from this portfolio. The idea was to start a model portfolio that our viewers can follow, and this was meant for long-term investors. But if we make changes every couple of months, then do you believe that as long-term investors, we should also be tracking each sector and stock in this manner, taking tactical ins and outs as well? Is that something we should keep in mind?
Excellent question. The concept of long-term investment itself is undergoing changes because the way the perception is impacting the stock in the short term, it's unbelievable. We have not seen this kind of, just look at him and there are many examples on the market where things have fallen. Now, I never thought that in 2 months I will get 30%. I never thought that in JK Tyre I will get 400% return. So now it has become very important that you also consider the annualized return. So if you are making very good money in a short term, don't hesitate to change. So that is my logic. And plus in terms of valuation also, if you look at tyre stocks, they never had a 6 to 8 PE. But now MRF is enjoying more than 16-17 PE, and even JK Tyre is now close to 10. So these are the reasons to make changes. But otherwise, few stocks like in our portfolio, Barmer Lorry, Karur Vysya Bank, we never change them. I mean, even Moil. So I would say that there would be always some 50-60% of stocks in your portfolio, which would be really very long unless they become multi-bagger within short periods.
I'll give you a recap of Chokka's portfolio. There's ITC, Infosys, RIL, Bombay Burma, Neyveli Lignite, International Paper Corp, Emphasis, Karur Vysya Bank, Barmer Lorry, Moil, and as of now, Biocon, KCP Sugar and Claris Life Sciences. If you have any questions about that portfolio, feel free to write to us. Our email ID is at the bottom of your screen. It's time for me to take a very quick break, but when we come back, we'll discuss Chokka's past recommendations and see how they've done. He'll also give us one stock that we should be buying right now at these levels. Don't go anywhere. A couple of years. What do you think the prospects are for Reliance Capital?
I think it's good. They have tied up with a Japanese company for insurance business. And as I said, Indo-Japanese collaboration will get strengthened further. There will be a lot of money flowing from Japan. In fact, Japan is spending a lot more on stimulus package than what US spends. And the stock also available below book value on 1 year forward earnings. So one should hold on to it.
Hold on to that stock. All right. Ramachandran Subramanian has written in, he has 19 shares of ONGC, which he bought at 909 rupees. He also has PC Jewelers, which he bought at 130 rupees. He wants to know which ones of these he should hold on to. Let's talk about ONGC first. It slipped this week because of that gas price deferral. This is again something the market was a little disappointed with. The government moved that decision into November. Two major stocks that would be impacted, RIL and ONGC. Give us a view on both of them.
I firmly believe that ultimately the gas price will be revised. Otherwise, we'll have big trouble because 80% of your energy is imported. Second, as far as ONGC is concerned, what I said for Engineers India is more applicable to ONGC. The fall in the crude oil price will do away with the subsidy burden for the company.
Yes.
So therefore, the profit should increase substantially. So I would suggest hold on ONGC.
Right. Let's also talk about PC Jewelers. Now, we know the festive season is coming up or has already begun, but we know that the RBI also has not relaxed any of the norms on import of gold. How long is it going to be before we see the RBI reach its comfort level as far as the fiscal deficit is concerned?
Next couple of months, even for next several years, because government has no option. You can't afford to import $35 billion worth of gold per year because you have huge shortage of gold because you have to import a lot of crude oil, edible oil, fertilizer, coal. So for importing necessary itself, you need a huge dollar. So plus, I normally don't invest in jewelry companies because I'm not comfortable with any business which involves a lot of cash. And third, these companies have got a huge inventory of gold as of March 31st. After that, the gold price started falling. So I don't know what would be the impact of fall in the gold prices on the inventory. So considering these facts, I would sell and buy very safe, conservative stock like Biocon.
All right. So would you then say avoid the jewelry sector entirely?
My personal learning is always avoid jewelry companies.
All right. Always avoid jewelry companies. That's Chokka's lesson for us this week. Let's also take a few more questions. Ranga Reddy has written in, he has 400 shares of MCX, which he bought at 800 rupees, and he has 1,000 shares of Apollo Tyres, which he bought at 200 rupees. Apollo Tyres first. We just talked about the tyre sector. You said, you do expect the government to intervene. Does that mean we should also get out of Apollo Tyres?
Certainly. Here, I don't want him to lose money because still the rubber price is crashing. Even in last 2-3 days, the rubber prices have crashed. So that's why I've given a very conservative. So easily he can get 220, then he can exit. Basically, I'm giving hold to exit in the short term itself.
All right. MCX, what's your call?
You should hold on. I mean, I'm very bullish on MCX in the long term because this is the largest, commodity exchange player. And globally, they have been growing. The business has been growing exponentially over the years. So with the new management, I think it will do very well. So you should hold it as a long-term stock.
All right, hold on to that one. Now it's time for us to take a look at the portfolio of our viewer. Every week we pick one lucky viewer. We take a look at your entire portfolio. Purnima is our viewer, and it's so nice to hear from a woman investor. Purnima has sent a list of stocks to us. She tells us she's a long-term investor. Now she has 100 shares of IDFC, which she bought at 146 rupees. Hold on to IDFC.
Definitely hold on, but only one message to her is that 82% of her portfolio only in two sectors. Yes. In banking and financial itself is 57%. So she should avoid. If something goes wrong, the whole portfolio can crack. So she can avoid this kind of aggressive exposure to one or two sectors.
So would you then recommend that the other banking stock that she has is ING Vysya Bank, which she has 75 shares in. Would you recommend she pulls some money, or where would you like her to put that money?
Yeah, definitely. In case of ING, I have suggested putting in KVB, Karur Vysya Bank, because I believe.
But that's bank to bank. How is she bringing down her?
Other areas I have cut down.
Okay.
Other stocks.
Okay.
So as I said, I believe that Karur can create a lot of wealth in 2 years. And IDFC she should hold.
This is the advice you're getting. You want to hold on to IDFC right now. You want to get out of ING Vysya Bank and move into Karur Vysya Bank. That's the recommendation that Chokka is giving you. The other stock in her portfolio is Escorts, which she bought at 134 rupees. Chokka, what should she do?
She can sell it and buy Unicum Lab because Escort has run up a lot, and secondly the monsoon overall it has failed. So there could be problem for tractor sales going forward, and also the company is making ROC in single digit. So therefore I would suggest sell on.
All right, last stock in her portfolio, First Source Solutions, which she has bought at 31 rupees, but she has 1,000 stocks of First Source Solution. What should she do?
She can hold on because I'm a little nervous about exchange rate. I think there will be a lot more stress, so therefore she can hold on.
All right. Interestingly, I don't know if she only has 4 stocks in her portfolio. She sent us a list of only 4 stocks, but it does seem inadequately diversified. Any other sector you'd like to add to her portfolio?
At this time, one should have, pharma stocks. And also, as I said, bottom-up approach, there are many individual mid-cap stocks one can consider. They are sector agnostic, but there are many good quality stocks.
And like you did earlier on the show, should she also add Claris Life Sciences?
Claris, International Paper Corporation. So this kind of stocks she can.
All right, Purnima, a couple of stocks that you can add to your portfolio there if you want to give it a more diversified, well-rounded look. And you can write back to us if you have any more questions. So can you. If you want us to look at your portfolio, write to us. Email ID is on your screen. Chokka, thank you so much for spending time with us this week. Of course, thank you for watching. Stay with ET Now.